Whether you operate one forklift or thousands, one location or hundreds, the new My Toyota customer portal can help you optimize your operation and material handling equipment. This one-stop, free-to-use platform is designed to help you take control of your information and make smarter decisions, all at the touch of a button. Register and access your data today at my.toyotaforklift.com. That's my.toyotaforklift.com. SaaS, RaaS, and now NaaS. Meter is here with networking as a service. That's NaaS. To bring fast, secure, reliable internet, networking, and Wi-Fi to your warehouse. With just one monthly rate and no upfront costs, Meter allows you to focus on getting connected and getting moving. No installation or hardware cost, and just one monthly fee allows IT teams to do more with less. And most importantly, warehouses save time on network troubleshooting, avoid expensive downtime, and get an overall happier IT team. Meter is already powering connectivity for companies with millions of square feet, including Stored, GoBolt, Veho, Trove, and more. Why not add your name to that list? Go to meter.com/thenewwarehouse to get your first month free. That's meter.com/thenewwarehouse for your first month free.
The New Warehouse Podcast, hosted by Kevin Lawton, is your source for insights and ideas from the distribution, transportation, and logistics industry. A new episode every Monday morning brings you the latest from industry experts and thought leaders. And now, here's Kevin.
Hey, it's Kevin Lawton with the New Warehouse Podcast, bringing you a new episode today. And on today's episode, I am going to be joined by Rueben Scriven. He is the research manager at Interact Analysis, and they're looking at all things in our space, in the market, and kind of generating reports and telling us some of the things that are going on. So I'm very excited to talk to him because obviously he's got a lot of good insights on what's been happening in the market and specifically around some warehouse automation, things that are happening there, and directly reflecting on multi-fleet orchestration platforms. We're going to talk a little bit about warehouse execution systems as well and what's changing there, and also some other things that are going on in the market too. So I'm pretty excited for this conversation and definitely interested to hear some of these insights from Rueben. So Rueben, welcome to the show. How are you?
I'm good. Thank you, Kevin. I have to admit, I'm fairly starstruck right now. This is one of my favorite podcasts. So really appreciate the invitation to talk today. And I'm looking forward to a good conversation.
Well, I appreciate it, and definitely appreciate what you guys are doing as well. And thank you for listening. Thank you for that. Definitely appreciate it. Happy to get you on here. So tell us a little bit about Interact Analysis before we kind of get started here. What is it that you guys do?
Sure. So Interact Analysis is a market intelligence company focusing on supply chain automation. So we provide research and consultancy services from industrial automation, robotics, and supply chain automation, all the way down to commercial vehicles. Myself, I'm responsible for our warehouse automation research practice. Here we've developed what we call our research ecosystem, our warehouse research ecosystem, which is a series of different research areas that feed into each other synergistically and provide a body of knowledge around things like how many warehouses exist in the world, how much is being spent in automation, which companies are spending that, and what kind of components are in various types of automation. So at many different levels and layers and viewpoints, we're analyzing this market to generate new insights.
Very interesting. And I got to know, how many warehouses are there in the world? Do you know off the top of your head?
About 212,000 above 50,000 square feet.
Interesting. Wow. Okay. All right. That's a lot. All right. So definitely a lot of space out there for us to look at the automation market. I mean, there's certainly all kinds of things happening, and we've certainly seen, over the past couple of years, just this obvious boom in automation, but, spurred by a lot of different things in the market, and just, I think the overall kind of realization that people are seeing that automation is here to stay, and robotics are here to stay, and it's going to be kind of the future of work. But tell us from, what you're seeing out there and what people are telling you in your research. I mean, what really is the current state of the warehouse automation market? I mean, where are we within the market right now?
Yeah, it's really interesting. So obviously during the pandemic, we saw a huge increase in the demand for e-commerce, which led to many new warehouses being built left, right, and center. As a result, these greenfield sites demand kind of large end-to-end systems. You essentially build a shed around the automation. So we saw a really big increase in large end-to-end systems. But as interest rates rose and as the demand for e-commerce slowed down, we started to see fewer large facilities being built. For example, in 2023, we expect about a 35% decline in the number of new warehouses coming online relative to 2022. And what warehouse operators are saying is they're saying, we're not going to build new facilities, but instead, how can I automate or increase the efficiency of my existing facilities? And this type of problem is typically served by point solutions, automation solutions that solve a particular problem. It could be automated packaging, it could be a small scale sorter, whatever it might be, but it's not necessarily going to be an end-to-end system. So what we've seen in 2023 is a general slowdown in the industry, largely being driven by these large end-to-end systems, which have a disproportionately large share of the overall market. But what we do see then is an increase in the demand for point solutions.
Interesting. Yeah. And I think that makes a lot of sense, especially as we look at, like you said, the kind of the overall economic climate and what that was looking like. I'll say, maybe at this time that we're recording this in early July here, I mean, it seems like the terror or the scare is a little subdued than it was maybe, in 2022 and heading into 2023. But I think it makes sense that we see, like you said, just kind of these pieces of automation being put into play versus the end-to-end solution. And I think, from my perspective too, I mean, I think maybe a lot of that is just because so much of the technology is evolving so much that I feel like, I know personally, it's, someone that might be looking at automation in the future for 3PL operations and things like that. Like, to do an end-to-end solution, I feel like there's a fine line of, is it going to be outdated in just a couple of years, right? Whereas then you're going to lose a little bit of flexibility than if you were to just do kind of certain segments of your operation and focus on certain things like that. But I'm curious, do you see, this kind of slowdown on the emphasis of the greenfield sites itself and focus on existing facilities? I mean, do you see the automation and robotics companies playing to that more and making sure that their solutions are able to fit not only greenfield, but also existing facilities and help these companies to utilize what they already have?
Yes. So what we've seen is, like you say, a proliferation of new technologies, oftentimes smaller kind of modules or subsystems, whether it's an auto store or a Berkshire grade put wall, whatever it is, we're seeing kind of more of these modular systems. And these large kind of system integrators who historically have been focusing on these larger end-to-end systems are tapping into this kind of more sort of modular systems by partnering. So we've seen, for example, Dematic partnering with Dexterity and AutoStore. They sell that type of equipment. We've seen various other partnerships, whether it's Swisslog and AutoStore. AutoStore really kind of drove this trend towards this bifurcation of the system integrator and the OEM, where historically the system integrators were the OEMs. Now the technological developments are happening so quickly, it doesn't make sense for the integrator to invest in the R&D, but instead partner with the OEMs, which are investing in that technological development and, are able to bring out new models and new iterations yearly, as opposed to what historically the system integrators were able to do. Very kind of minor technological updates each year. We're seeing such a rapid change in the industry now.
Very interesting. And I think that makes a lot of sense too, because I talked to, I'm forgetting what company it was, but recently on the podcast, I spoke to them and they, initially their thought was that, they were doing the integrations themselves and things like that. And now they've started to partner with integrators, allowing them to focus those resources more on doing the R&D, like you mentioned, on the robotics and automation company side versus, like you said, the integrator doing the R&D and then implementation and all these things. And I think it allows the market to move a little more rapidly and also help companies, have more accessibility to those technologies a little bit. So I'm curious on that accessibility side. As we look at the market, I think up until maybe 3 years ago, it seemed like automation, robotics were kind of out of reach in a sense for smaller to medium-sized businesses. But I think we're seeing certainly in the last year and certainly at ProMat, I think too this year, are able to see that it seems like companies and robotics companies are moving to these RAS models and trying to make it more accessible and easier for smaller to medium-sized businesses to bring these technologies in so that they can compete as well. I mean, how are you seeing that segment of the market approaching automation?
Yeah, we're definitely seeing growth in that SME segment. I think right after the pandemic, we saw the big behemoths investing in automation, be that Amazon, Target, Walmart, Tesco in the UK. But there was somewhat of a subdued or delayed response from some of the SMEs who were perhaps didn't have the capital or were more risk averse from the automation. But we're now seeing that these types of companies are investing quite significantly in automation, and they're typically served by what we define as the pure play integrator model, be that, Bastion Solutions, high-tech KPI solutions. They typically service the kind of mid-tier market. They're not necessarily the Amazons and the Walmarts, but they're not also the tiny companies, but they're kind of that mid-tier market. And if you look at the market and exclude Amazon and Walmart and Target from there, the big three in the US, we've actually seen that pure play system integrators have grown at a higher rate than the OEM integrators. And these are the companies that are typically, more geared towards those smaller companies. And so that's one element of it. And the other element of it is kind of these novel business models that companies are employing. RAS is fairly commonplace, but we are seeing, for example, AutoStore with their pay-per-pick model. So that's one of the first examples of more of a fixed automation company offering more of an OPEX model. And that, again, could play into it. And we're starting to see more financial companies coming into the mix where they essentially buy out the automation and lease it to various kind of smaller companies. So I think we're at a point where automation is becoming more accessible, but we still very much are geared towards the larger companies investing in automation. In Europe, it's slightly different. There are a lot more smaller companies investing in automation. But just to give you an idea, in the US, the top 8 investors in automation account for more than 55% of total automation investments. Wow. Amazon alone accounted for nearly 40% of total warehouse automation investments in the US in 2021. So it's extremely skewed towards the large companies in the US. In Europe, it's slightly more diversified, with many of the smaller companies also investing in automation, but it's still geared towards larger companies when you take it at kind of a global level.
Interesting. And I think, it's pretty obvious to anyone that's in the industry. They see, just the power of like an Amazon that you mentioned and the money that they've been putting towards automation robotics for a very long time, right? But I'm curious, if you look at, and, I've been to a lot of the trade shows and obviously, friends with people from a lot of these different automation robotics companies. And, obviously they're all trying to get in with Amazon or the big players, right? But do you think that there is, like, if there's a robotics or automation company that were to focus on that smaller company segment, I mean, not necessarily small, but, smaller than Amazon, which is a lot of people, right? I mean, could they really make this market explode and really find a way to tap into, those other players that are not necessarily being catered to or top of mind in that sense?
Yeah, I think, right now we are seeing a lot of growth in that smaller tier segment. So I certainly think that the companies which are targeting the SMEs are seeing strong growth. However, when it comes to, total investments, it's difficult to exclude the big players entirely. I think most companies have somewhat of a diversified approach where they have some key accounts and then smaller accounts. I know that many companies intentionally stayed away from Amazon. And I think for those who did kind of dodged a bullet from, the last few years where they've completely slowed down their investments in automation relative to the highs of 2021. But I think to exclude those big accounts, potentially does limit your opportunity given the fact that they still account for a huge, disproportionately large share of investments.
Yeah, absolutely. And I think a lot of companies have probably, been able to build that foundation based on that initial investment, right, from the big player. So it makes a lot of sense, definitely. And I'm curious, when we're talking about investment here in your kind of ProMat post-show report that you guys had, there was an interesting line in there. And I'm curious, I want to hear a little bit about this because it says that vendors commented that ROI discussions with potential customers have become much easier, almost irrelevant in the past 12 months as manual operations are becoming impossible in certain workflows due to the lack of labor. And I think that's really, really interesting because so much of the concern about automation and robotics for a long while has been around that ROI and what is a realistic ROI, especially when you're looking at a lot of new technologies that necessarily haven't been proven for a very long time. So tell us a little bit about that and what that kind of means for the market and what these vendors are saying about potential customers and their views around ROI now.
Yeah, so I think, historically, as you say, the conversation has always been geared towards labor cost. And how much does automation save relative to manual labor? And I think during the pandemic, that labor cost shifted to labor availability. It's not necessarily how much will I save in my operation, it's can I keep my operation going?
Yeah.
And that really kind of shifted the calculus in many cases where ROI became less of a factor and continuing operations became the central thesis of investing in automation. I will say that we are kind of keeping a pulse to the ground. We interview about 400 to 500 companies each year, and we're constantly having these discussions. ROI is creeping back into the picture. Some might say ROI is back. So I think we're starting to see more discussions around ROI, where historically, or at least in the past kind of 2 years, ROI was almost thrown out of the equation. Now companies are still, looking at how do I continue my operations, but they want to do so in a cost-effective way. So I think, we're at a turning point, I think, where the next year we see this as being a correctionary year. And I think some people might misinterpret it as a return to normal. But I think we're still very much elevated from where we were prior to the pandemic. And I think whilst we are now kind of going back to thinking about ROI, it's not necessarily back to the ROI pre-pandemic. I think that the appropriate ROI kind of thresholds have shifted as well. Companies are willing to pay more in order to justify the automation.
We'll be back after a quick break.
You hear a lot about supply chains these days, because if the past couple years have taught us anything, it's that an efficient, well-managed supply chain is absolutely critical to keeping businesses successful and consumers happy. I'm Will Haywood, and I host a podcast called All Business, No Boundaries, where we talk about supply chains, how they work, what happens when they don't, and the innovations that are redefining what's possible in the world of logistics. Join me for insightful interviews with thought leaders and industry experts. We discuss how optimizing supply chains can break down the barriers that are holding businesses back. That's All Business, No Boundaries by DHL Supply Chain. Listen and subscribe wherever you get your podcasts.
Interesting. And it's interesting as you said, ROI is back. It's like thinking like, oh, ROI is on its comeback tour, right? Something like that.
Yeah, exactly.
So, I think it's interesting. And obviously, I think too, and I just saw an article actually this morning, I forget, somewhere on LinkedIn, somebody posted about, the labor challenges kind of are flatlining a little bit and, returning a little bit back to normal and, not necessarily having as much difficulty. So I can see how that kind of ROI discussion is coming back into play. And certainly, like you said, there was a balance of where you're do I just keep my facility going in some way because I can't get anybody, or, do I just, let it stop running basically, essentially, which obviously I think for the majority is probably not an option. So, it made a lot of sense to look at it that way. And I'm interested to see kind of how that plays out over, the next kind of year or 2 years or so, and see what that means, especially as, I think companies are working towards trying to prove out quicker ROI and different type of business models from the automation robotics standpoint.
I think just adding a bit more color to what you were saying there around kind of the labor, somewhat flatlining. And I think during the pandemic, we saw warehouse labor go from about 1.3, 1.4 million FTEs in the US, and that increased by about 1 million. So almost doubled during the pandemic, a huge increase. And that's really where we saw that labor availability question come in. 2023, we expect a decline of the number of full-time equivalent employees by about 200,000. And then 2024, we're expecting to roughly flatline, about 50,000 increase relative to 2023. But then in 2025, we're expecting another big increase of about 250,000 FTEs increase to that employment stock. And I think, again, it kind of goes back to what I was saying earlier. We are anticipating somewhat of a slowdown, but it's going to be pretty quick for us to get back into that high growth mindset again.
Interesting numbers. And it'd be interesting to see how that kind of plays out. And I think it's interesting to see in the market too, like how some automation robotics companies are playing to, the fact of, not necessarily fully replacing a worker, but, empowering that worker a little more, or making their life a little easier to help with that retention of employees and things like that. So it's an interesting kind of balance there, I think. So we talked a little bit about the automation market and kind of what's going on there. But I think one of the big underlying things, and, certainly you've seen this in the past couple of trade shows I've been to this year, there's always like I think the visual impact of the automation and robotics is always there, right? And it kind of hits you first. But underlying on all of that is essentially software. And we had AK Schultz from SVT Robotics on the show recently, and he kind of put it in a way that he's like, it's just, you see it as hardware, but really at the core of it is software, right? It's really the software that's running all of it. So we want to talk a little bit about warehouse execution systems here. And we've talked about this on the show previously, but you're seeing kind of a change in what the warehouse execution system looks like. And so, tell us a little bit about, maybe for people that are not familiar, like what is a warehouse execution system?
Yeah, it's a good question. And I listened to the SVT episode, and I loved his comment about the Jenga tower of code and all the connections that go along with it. I thought that was a great metaphor. But I think we see the warehouse execution system slightly differently. And I think one of the issues is that everyone has a different definition of it. So we've been working for the last year and a half now trying to sort of systematize the warehouse software space to really differentiate between different solutions. And I think kind of broadly speaking, when we think of a WMS, for example, that's really concerned with what comes in a warehouse, what leaves a warehouse, and where it's located. A warehouse control system, on the other hand, is really concerned with the flow of goods through automated systems. It's essentially, how do I get from point A to point B across automation? For example, if you have a conveyor network or a sorter, it will, say if your package is going along this sorter, use this chute to get the package down to that particular endpoint. So it's really just, point A to point B. An execution layer is all about optimization. And a great metaphor for this is a map. So if I'm in London and I'm trying to get from Piccadilly Circus to Elephant and Castle, for your US listeners, 2 places in London, I might look at a map and try to, see what the shortest path is based on the roads. But if I'm looking on a map, I might see what the shortest distance is visually, but I have no idea what the traffic conditions are like. I have no idea which roads have the highest speed limits, if there's any particular road closures. So a warehouse execution system is a bit more like Google Maps. If you're trying to get into one point to another, you want to take into account all the different variables of the particular system. And bringing this back to a warehouse, the control system, as I mentioned, is all about the flow of goods. The execution layer is all about the speed and location of order processing. So what I mean by this is, if, for example, you have a flooded put wall, you don't necessarily want to continue the speed at which you're deploying orders to the warehouse, because then you're going to have upstream pickers which are left idle whilst the downstream sorters or put wall is left processing the remaining orders. Similarly, if you have a shuttle system which is operating at maximum capacity, a warehouse execution system might be able to direct pickers to a manual forward pick area instead of waiting for the shuttle system to continue operation. So if we think about it, the warehouse control system, like I mentioned, is all about the flow of goods from point A to point B. The execution layer actually has nothing to do with controlling the automation. It's all about understanding what the workflows are, what the throughputs of each workflows are, in order to calculate what the most efficient throughput. And just by way of the fact that a warehouse control system is very good at measuring workflows, it has all of the data about, how quick the sorter is, what the capacities are. It's naturally led to warehouse execution systems emerging from control systems because they have all that data already. They can very easily optimize the overall system. But you don't necessarily need to have a control system in order to provide the execution layer. In some cases, for example, Manhattan Associates, they have an embedded warehouse execution system whereby they still require a WCS to sit in between the automation and the WES. But the WCS basically transfers the information about the automation to the warehouse execution system. And then that warehouse execution system, which is embedded into the WMS, makes all those calculations to calculate what the most efficient route is to optimize throughput. And I think what we're starting to realize now, and certainly during ProMat, this discussion or this idea was echoed a lot, is that an execution layer is purely just the ability to dynamically release orders based on the constraints of the warehouse. It has nothing to do with PLC communication, with controlling automation. It's all about dynamically releasing orders. And I think what we're seeing now is a bifurcation in the execution layer where in some cases, the WMS vendors are trying to offer the execution layer. And in other cases, the automation vendors are trying to, offer their execution layer. And it's going to become heated. There's going to be battles fought for this layer. And, right now the market is about $550 million globally for warehouse execution systems. This is expected to grow about 20% each year out to 2027 to about $1.5 billion. Right now, the vast majority of deployments are what we call CWES or control warehouse execution systems, where the warehouse execution system is emerged from the WCS, and a very small fraction are EWES or embedded warehouse execution systems. But that dynamic is expected to change over time as more WMS vendors lean into the execution layer. And this actually has pretty big implications for automation vendors, because at the end of the day, the value of your software that you generate is basically how intelligent it is how many decisions your software makes. The more decisions your software makes, the more intelligent it is. And the more intelligent it is, the more value it is, and the more profitable it is. But if the WMS starts making more decisions about execution, and if the automation itself makes more decisions, like AutoStore, for example, it has the software to kind of govern itself, where does that lead the WCS? It means that the value is being squeezed away. On one part, the automation vendors are capturing more value. And in the other part, the software WMS vendors are capturing more value as well by deploying their execution layers. So automation vendors have two choices. They can either double down on very basic configurable WCS solutions, which essentially kind of agrees or kind of is sort of happy to continue in this reality of the value being squeezed from both ends. Or alternatively, they can double down or really lean into the execution layer. And in many cases, companies are doing both. Honeywell Intelligrated, for example, has their MP4 controls, which is a very kind of basic WCS solution that's very cheap relative to the industry standard. But they also have a very sophisticated WES as well. So they're kind of betting on both horses here. And I suspect most automation vendors will do the same, trying to win deals where possible with their basic WCS and essentially having the WMS and the automation doing most of the decisions. But where possible, having that very high value WES solution as well.
Very interesting. And I mean, it makes a lot of sense. And I love how you put it there, the more decisions that the system is making, the more intelligent it is, which I think makes a lot of sense. I mean, it sounds like, do you think that eventually the WCS is going to get just kind of squeezed out of the picture?
Potentially, although I suspect there's always going to be a WCS, and that's largely down to the latency. The WMS vendors are mainly in the cloud, so they need some kind of system on premise to manage the automation, whether it's a very basic WCS or not. And in some cases, and this is kind of where we expect the industry to go, is that the automation vendors might have a bifurcated WES, WCS solution where their WCS is on premise and the WES is deployed in the cloud, but it's deployed essentially as one system. An on-premise module and a cloud module, but it's kind of the same solution. That's, for example, what Corba's unified control system does. It has an on-premise element and then a cloud element as well, but it's one system that is essentially deployed in two environments. But I think to your point, there'll always need to be something on-premise that has that millisecond response time. But some of the more complicated calculations around optimization can be deployed in the cloud, which is typically more computationally challenging and is a lot more efficient to do it in a large sort of big data center, essentially.
Interesting. And do you think that, because you mentioned AutoStore here a couple of times, and earlier you mentioned the kind of pay per pick model they're coming out with, which I think is the PO, right? And, I've been talking to those guys. Actually, as of this recording, that episode hasn't released yet, but they will be on the podcast soon. But so, I know for that, like they've actually kind of come up with this all-encompassing system, right? Standalone, where it has like its own WMS built into it too, essentially. Do you see where these automation companies are going to be maybe trying to do that as well, even further, where they're building their own systems and essentially saying like, hey, like we're everything like in one box?
Yeah, and I guess this is similar to what the historical model has been with the likes of Dematic and Honeywell, where they've built their own technology, provided the software. So it's similar to what they're doing there. I'm not too sure what AutoStore's strategy is in terms of whether they are looking to start integrating their systems. But one theory I have why they are developing their WMS is because, Dematic and Swisslog have the most, I'm not going to say most, but Dematic, Swisslog, and Element Logic are able to provide a lot more of that kind of WMS and kind of upstream software solutions. But by AutoStore developing that WMS themselves, they can essentially come to an integrator who doesn't necessarily have that software capability and say, here's my whole system, can you deploy it for me? And it essentially then increases the reach of AutoStore by going to many of the system integrators that might have not had the capabilities that Dematic and Swisslog and Element Logic and those kind of very top tier system integrators might have by developing that WMS and the various software systems that go alongside it. But I think what you're saying kind of maybe talks to a more sort of broader issue or question really is are automation vendors becoming software companies that also sell hardware as opposed to hardware companies that also sell software? And I think this is a really interesting question, which, if you ask any automation vendor, they'll say that is the way they're going, but there's definitely a big spectrum in terms of how sophisticated the software solutions are of various vendors. In many cases, the more startups or the emerging companies have been able to build a unified software platform that's built on a common architecture, whereas many of the sort of more incumbent players have acquired so many different companies that their software is a patchwork of different systems and can sometimes be quite difficult to deploy across multiple environments and whatnot. So I think, software is becoming an all-encompassing and very important aspect to many of these companies, but certainly some companies are doing it better than others.
Very interesting. And I think it'd be really interesting to see how that kind of continues to evolve. And as you mentioned, it's kind of will become a battle in a sense. Almost we could call it the battle of the acronyms, right? WES,
yeah. Well, we're introducing two more, the C and EWES. So this is going to get one acronym bigger.
So I think it'd be really interesting to see how that evolves and how kind of these players adapt to that. Because even like I was at a Momentum. You mentioned Manhattan Associates there, and you can see how. And I used Manhattan very early in my career, which is about probably like 11, 12 years ago, and just seeing like how they've tried to kind of evolve and adapt to the market and being able to work with these different types of solutions and have the API plugins and all these things. I think it's really interesting to see how companies that are newer are taking what they they see as kind of the old school, and saying like, oh, let's do it differently. And then the old school, I guess we can call it, is coming and seeing like how can they adapt to that and do those types of things. So it'd be really interesting to see how this evolves over time, I think. So, I think we could probably talk for a very long time, you and I think, on all this stuff. But, I don't want to, make sure that we don't go too long with this conversation. But I'm curious, as you're doing a lot of research and seeing all these things in the automation market, I mean, what do you think is either the most exciting solution right now or the most exciting application that's being addressed by the automation market?
I think it has to be robotic picking. It's really the kind of holy grail of automation. It's been something which people have been talking about for a long time. It's often, saying it's always 5 years out every year. But I think now it's finally kind of getting to the point where it is being commercially deployed. And I think, we've done fairly kind of high level research on it for the last few years, but we've done a really kind of deep dive analysis the past 6 months where we've looked at all the different workflows that happen in a warehouse, all of the different shift patterns in different sectors, countries, labor costs, and so on and so forth, to develop a really complex ROI model to really predict where will robotic picking be deployed and in what environments and scenarios does it actually make sense, and how will this change over time as robot costs come down and labor costs go up. And I think we were really surprised about the predictions that this model is making. It's a lot more than we had initially anticipated. Just to give you some, an idea of the scale of this, we expect there's going to be about 140,000 robotic picking systems deployed by 2030. Wow. In that particular year, 2030, we expect just under 50,000 deployments. So really kind of big ramping up. And it's really been driven by three main factors here. One of which is slightly, you wouldn't necessarily thinking of it, but the number of people performing static manipulation roles in warehouses is increasing. Mm-hmm. Right now, the warehouse automation market, only about 20-25% of warehouses have automation in them. And as more automation is deployed in warehouses, there are going to be more people that are just static and manipulating items. So the total opportunity for selling robotic picking is increasing massively because of that fact. And secondly, we're seeing just the coverage and the pick rate is increasing. So by coverage, I mean, if you look at an Amazon warehouse, I think I read that their Sparrow can pick about 60% of the SKUs in their warehouse, which is actually fairly, small amount. But over time, that coverage is going to increase. They're going to be able to, pick more of their SKUs. And similarly, the pick rate is increasing. We spoke with one robotic picking company as part of the research that said their pick rate is increasing at about 10% each year. So a massive increase in how quickly items are being picked, and the error rates are declining too. And then the third factor is just the unit economics. Labor costs are really increasing very quickly, and robot costs are coming down very quickly at the same time. The software costs are coming down. The price of robots is coming down because historically the robots used within warehouses were built for the automotive sector. So they're very highly spec'd. They're used for kind of spot welding with nanometer precision, but warehouses don't need that. And robot companies are starting to pick up on that and building lower spec'd warehouses for warehousing applications, which will again significantly reduce the cost of those robotic picking systems. So when you consider those three things together, you kind of realize, wait a second, we are really at a turning point here where robotic picking is going to really dominate. But I think it's going to be, regionally specified, or there's going to be differences in regions. I think in Europe, for example, we're expecting lower deployments than in US and China, for example, largely driven by the kind of more strict and stringent labor standards and regulations associated with kind of labor displacement. But I think even in the US, the unions, it's going to be difficult to see a, robotic picking system in a warehouse for many of the unions. So I think, that there's uphill battles to get these deployed, but I think in general, we are at a turning point in this particular technology development.
Yeah. I think it's really interesting, and it's been great to see the evolution of the technology too, as well. Like you mentioned, the kind of the being able to utilize the robotic picking, and like you said, it's been it's coming in 5 years for 5 years or something, like every year it's 5 more years, right? But I think it's really interesting to see. And I think, one of the initial challenges certainly was some of the gripper technology, and, how is it going to be able to grasp and grab those things? And I think a lot of companies have really tackled that challenge and have been able to figure out those different ways. And it's interesting to see, because I've talked to a couple of companies that are doing robotic picking as well. And It's interesting to see too, like how they're utilizing, AI and things like that to be able to learn more types of picks. And, from your data there that you mentioned, kind of seeing that increase over time, like of the amount of SKUs that something's being able to pick and, the error rates going down and all those different things. I mean, I think, it's only a matter of time where, we see that this is kind of fully fledged out. And like you mentioned, 140,000?
Just under 140,000.
Just under
by 2030.
Yeah, I mean, I think that would be pretty incredible. It'd be interesting to see how that evolves, kind of the warehouse and what the warehouse looks like, and the overall kind of workforce within that warehouse too. It'd be really interesting to see how that plays out.
And I think one more just important thing on that. So 140,000 represents a penetration of about 2%. So if you look at all the full-time equivalent employees performing static manipulation roles, and then you look at the displacement from robotic picking, it's only 2%. So, it's only scratching the surface by 2030.
Yeah. Yeah, very interesting. So a lot of kind of runway there to go and be able to grow that market and see how that kind of penetration increases over time. So really interesting talking to you, Rueben. And I think we can have multiple other talks in the future, seeing, all this kind of great knowledge you're bringing from your research and being involved in the space. So Interact Analysis also has a new kind of warehouse building stock database, right? So tell us a little bit about that and how people can kind of find that.
Yeah, sure. So we developed this tool internally initially because we're trying to forecast how much is being spent on automation. So in order to do that, it's important to know how many warehouses actually exist globally. So we developed a tool basically that looks at this exact problem. How many warehouses are there in the world? In which countries are they in? What sectors are they in? What facility types are they? Whether they're a sortation center, a fulfillment center, a warehouse. So we can say, for example, how many apparel warehouses are there in Germany that fulfills online goods? And then more recently, we've then been adding new features. So we're now doing end customer analyses where we can say in Germany, not only how many apparel warehouses are there, but who owns them? Are they Peek & Cloppenburg? Are they Zalando? Are they DHL? We're trying to understand then who owns those facilities and how much those companies are spending on automation. So we've kind of tracked the investments they've made. We're constantly interviewing them and their peers and automation vendors to piece together that jigsaw puzzle to understand, what is the demand for automation across different end customers? How many facilities do they own and what locations they are? And it's really developed into this kind of all-encompassing strategic tool which allows companies to see, in different geographies or sectors or countries, what's happening at the moment in terms of the number of warehouses, but also who owns them and what they're doing.
Very interesting. And, I think it's a really great report to be able to look at those kind of things. And I think it's really interesting to see these two as well, as you're able to kind of get that extraction of information from multiple sources in kind of one place. I mean, I think it's really useful for people that are interested in learning on what's going on in the market and also, thinking about what are they going to do in the future as well, to kind of see like what are other people doing and, what are things are trending and what makes a lot of sense to kind of focus on or maybe not focus so much on because it's too early or something of that nature. So really interesting stuff from you, Rueben, and really appreciate you coming on the show. And of course, appreciate you being a listener too. And now you can say you've been a guest as well. So that's a great thing. And definitely appreciate what you guys are doing at Interact Analysis. I think is very valuable for the industry. And we'll definitely put more information about Interact Analysis on the website. But if people want to find you guys, what's the best way to do that?
The best way is either on LinkedIn, find our LinkedIn page. You can reach out to me at ruben.scriven@interactanalysis.com or come to our website. We have a lot of free material, a lot of insights, articles that we write about different topics, and I'm sure there'll be something of interest for you there.
All right, great. And we'll definitely put all that information at thenewwarehouse.com as well. So Rueben, thank you so much for your time on the show today.
You've been listening to the New Warehouse Podcast with Kevin Lawton. Subscribe and check us out online at thenewwarehouse.com.
Thank you for listening to this episode. If you want more content from the New Warehouse, check out our new video series called All Hands on LinkedIn. Just search for the New Warehouse on LinkedIn and follow along.